Welcome to the Robinhood, where you can trade stocks with zero commission. YOLO your paychecks on meme stock and occasionally watch trading gets halted just when things are really interesting. Buckle up because we are diving into every angle of this financial roller coaster. Back in 2013, two Stanford brothers, Ballard and Baiju, they had a vision. And the vision was very simple. The idea was no commission. They want everyone to trade. They want everyone to be the part of the Wall Street, not Wall Street fat cats. But the question comes is, what's how they will be profitable? Yes, it is revolutionary, but how it will be profitable? That's where we have to get in that. And if that is the question is in your mind, then you are in the right place to get that answer because that's where the Robinhood revenue becomes far much sneakier. It is far much sneakier than a hedge fund on a short squeeze. And here it's how they make billions. Yes, I'm talking about billions, not millions. Number one, payment for order flow. Yes, they sell the trades done by Robinhood customers to a high frequency traders so they can bet in favor with you or sometimes they can bet against you. It's like the Robinhood customers are the product. Just like you are a product for a free social media app, that's what they're doing. Number two is Robinhood Gold. It's about margin trading and giving you the research tools so that you can trade better and get some more money to trade. Except they can make a margin call at you at 2 a.m. It's very similar like Netflix for stocks. You pay a subscription monthly fee. Number three, very important. They lend the stocks called stock lending. Yes, you buy the stock so that stocks can go up, but they lend the same stocks to short sellers so they can actually help the hedge funds so that they can short the market and let the price go down. Number four is cash management and gold card. This is called cross-selling your business. Interest from uninvested cash and the new premiums from the credit card. They want apparently Robinhood to become very similar to like a MasterCard or Visa. They want to come into the credit card business. And that's where the cross-selling is happening. Number fifth is about crypto trading fees. Yes, the crypto trading fee, I used the word fee, not free. For you, the trades appears to be free. Actually, it is not free. And that's because they make a cut through spread pricing. The price you put a bid and the price that a customer is asking on the other side, whatever the difference is, they make money out of it. That's how they make the crypto trading fee. Ah, now let's talk about the meme stock mania. Yes, the era of diamond hands. To the moon. Robinhood became the go-to app for 2021 meme stock mania for GameStop, fueled by Reddit, fear of missing out, and yes, the stimulus checks. But then what happened? They halted the trading on GameStop. It was where the retail traders felt betrayed. Lawsuits were filed, congressional hearings happened, memes were made, trust was broken. Robinhood been in hot water more times than a day trader checking their portfolio at market open. And let's recap on their biggest controversies. Yes, their biggest controversies. And before I put these controversies into you, I want to see Charlie Munger's comments on Robinhood Business. Here you go.
Robinhood trades are not free. When you pay for order flow, you're probably charging your customers more and pretending to be free. It's a very dishonorable, low-grade way to talk. And, and nobody should believe that Robinhood's trades are free.
Munger also equated commission-free trading with what he called disgusting lies.
So the biggest controversies that happened on Robinhood Business is the biggest fine ever, the largest ever fine on misleading the customers and system outages by FINRA, the FINRA fine. It is 70 million. Yes. Number two, gamification of trading. They have made investing look like as if you are putting investing in a casino. You feel like it's in a casino. And number three, which is very important, and it can happen in future, is SEC cracking down the payment for order flow. If regulators feels ban it, Robinhood revenue could take a very serious hit. Yes. Now, I've told you all the negativity, everything about it. But before I talk about very, very, very positive numbers, now I want you to listen to what the CEO comments are on Charlie Munger's point.
Well, Robinhood responding, sending CNBC this statement. It is tiresome witnessing Mr. Munger mischaracterize a platform and customer base he knows nothing about. No, Robinhood doesn't charge commissions and does not allow day trading or short selling. We never did. He should just say what he really means. Unless you look, think, and act like him, you cannot and should not be an investor. We're happy to share our educational tools, as it also CMC has lost on digital currencies.
So fast forward to quarter four 2024. Yes, that's where I want to show you the positive nature of the Robinhood. That's where Robinhood is actually flexing some serious financial muscle. The revenue record is 1.01 billion, up 115% year over year. 115. If you talk about net income they made, it's 916 million, up from just 30 million in quarter four 2023. The diluted EPS is of $1.01. Let's talk about its adjusted EBITDA. It's under 613 million. It is up 300% from the previous year. Now let's talk about the stickiness of the business. It's called gold subscribers, 2.6 million, an 86% increase year over year. If we talk about assets under custody, 193 billion. It's up 88% year over year. 88% year over year. And it could be driven by higher equity, because where the equity's going price is high and the crypto valuations. But yes, that means assets have gone astronomical 88% growth. Let's talk about their net deposits. It's 16.1 billion in quarter four, up 42% from annualized growth rate from the previous year. After looking at all these numbers, you can come up to a conclusion that the management is actually doing the right direction for the business. And that's where they have shown positivity by doing share repurchase. 160 million is already poured in by 5.3 million shares with an average price of $29.79. I've told you about all the positivity. Now let's talk about some gray area where it's not about a gray area, about the stock-based composition, where the owners or investors get diluted. If we talk about quarter four 2024, they have invested in and they have poured money of around 77 million in stock-based compensation. If you do the annual total of stock-based compensation, it's around 304 million. So total of 304 million in 2024 as a stock-based compensation, and share repurchase is around 160 million purchase it. So around 50% they bought it back in numbers. I'm talking about in dollars. But looking ahead, 2025 expense plan ratio, they're expecting that their SBC is somewhere around 2 billion to 2.1 billion. It emphasized the investments into new products and international expansion. So that's where the point comes is they're going to have an SBC of 2.1 billion into 2025, but they are expanding themselves into the new horizons, new products and new expansions. Now let's talk about what are they. We know that Robinhood isn't just sticking into the US market, they have expanded it to UK and EU in 2025. Now they are planning to be in the Asia Pacific region, with Singapore serving as their local headquarters. Other markets in pipeline include Australia and Canada, as Robinhood aims to become a global financial powerhouse. So think about how this global horizon of expansion is going to happen. And that's where 2.01 billion stock-based compensation for 2025 is where they have reflected. Now let's talk about what analysts expect their consensus is. They're expecting an EPS for 2025 is around $1.35, which is around 8.87 increase. If they talk about the revenue, it's around 27% increase every year. If I just talk about Goldman Sachs, they have upgraded Robinhood to buy with the target price of 46 and EPS around $1.50. Whereas Bank of America is already more bullish with the target price of 53 with an EPS of $1.75 by 2027. So with expanding these offerings and going international, Robinhood could be on the track of becoming way bigger than what we think. So after understanding all the negativity and the positivity and the numbers, Robinhood really appears to be changing the game. But the question comes is, can they stay? Let me know in your comments. Do you still trust Robinhood or are you holding it just for the memes? Yes, don't forget to smash the like button, subscribe, and keep your diamond hands strong.